It was a positive day for the U.S. stock market as we closed at all-time highs on the S&P 500. We did hear some positive news out of the China front. President Trump says that he and President Xi are agreeing to some terms. Obviously, we don't have a deal yet, but at least we do seem to have a sense of improvement on that front here over the past week or so. It wasn't all roses, however. We did see the Russell 2000 small cap index struggling here today. It did end up with a bullish intermediate confirmation signal, but nonetheless, it remains the laggard of the major indices here in the United States. I do want to focus our trade application example on the shining gold market, where we have seen a little bit of a resurgence here in recent weeks and months. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 2nd, 2019. First off, if you are new, welcome aboard. Remember to go to our YouTube channel, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list. In addition to that, make sure you go on over to Twitter and follow me if you're not doing so already. My handle is @BrandonVanZ. Thank you to everyone who clicks like and retweet on all of our Market Outlook related posts out there. And then lastly, we do have a presence on Facebook. You're welcome to join our group in the web address embedded in the logo in front of you. Also, a quick housekeeping note. Remember that David and I will both be out of the office this upcoming Friday, so there will be no Market Outlook video. I'll still be here tomorrow to do the video. Also, for those of you that are premium members of Market Scholars, my Strategy Lab swing trading class will be moved up so that way we can get our trade done while the market is open. So tomorrow, for 1 week only, my Strategy Lab class will be at 11 a.m. Eastern time. All right, let's go ahead and dive into the charts here tonight. As you can see, I've got chart 4B pulled up here in front of us. And this will just look at the four major U.S. equity indices and kind of give us the view from the market forecast technical indicator perspective. As a reminder, when you're looking at your chart setup, assuming you are a premium member of Market Scholars, when you see the green background color of your chart, that reminds us that we have a bullish intermediate term posture. So remember, there are various postures depending upon the time frame you're going to look at on these charts. For instance, tomorrow in my swing trading class, we'll be looking more at the near term line. That's more of a swing trader's view towards the markets. But general posture setting device that we use here during these Market Outlook videos is more from the intermediate time period, so going out, a couple of months basically. And as you can see, we do have green background colors on all four of our charts right now. Now, before we get too excited, keep in mind that the Russell 2000, as I mentioned in the intro, is struggling on a relative basis. Notice the Russell 2000 was down 0.58% today, whereas all the other three markets actually were up. And in fact, we did have an all-time closing high on the S&P 500. Note that the high label there is actually above yesterday's candle, but that's on an intraday basis. Today we did close higher than yesterday's low, so we do have a closing all-time high on the S&P 500 here today. So anyway, the Russell 2000, because of its pullback in price here today, note that the red line, which is the momentum line on the market forecast, which is the most sensitive of all the lines on the market forecast, is now in the lower reversal zone. So when you have the green line either trending up between 20 or 80 or simply above 80, and on the exact same day, that red momentum line in the lower reversal zone below 20, that's what's known as a bullish intermediate confirmation signal. So note right now that the intermediate line on the Russell 2000 is at 78.38 and rising. So it's not in the upper reversal zone because it's not above 80, but because it is between 20 and 80 and rising, we do consider that to be a bullish posture. So step number one, identify whether we have a bullish posture. That's easy to identify by just simply looking at our chart, and the background color is green, so that helps us along. And then step number two is identify whether the red line is in the lower reversal zone. That sets up what is known as a bullish intermediate confirmation signal. And somebody who utilizes that particular signal has a buy the dips mentality. In other words, the posture is still bullish or positive, however you want to say that, but we have a momentary pullback within that bullish posture where you could possibly buy a security, or in this case an index, at a cheaper price than you would have been if you're somebody that relies more upon breakouts or other types of setups. So that's one possibility. Keep in mind that we do have a falling market sentiment line with the Russell 2000, whereas with the S&P 500 it is rising. So, we've been kind of mentioning here for not just in the last couple of weeks, but really for months, that the Russell 2000 has underperformed the rest of the stock market. In fact, you can see that playing through with just the 3-month numbers themselves. Notice that from a 3-month basis, Russell 2000 is barely up. It's effectively flat, whereas the 3-month performance on the NASDAQ is over 3%. The 3-month performance on the Dow Jones is over 2%, and the S&P 500 is nearly 4%. So again, Russell 2000 has been a laggard and continues to be kind of a thorn in the side of the bullish story that we have otherwise. But for those of you that were waiting for a bit of a pullback, perhaps you got it today with over 0.5% of a pullback. We do have that bullish intermediate confirmation in effect. Let's go ahead and take a look at our next chart setup now. This will be chart 4C for those of you playing along at home that are premium members of Market Scholars. Remember, this particular chart setup, the background colors mean something different. This is the 3 green arrows chart setup. When we have a green background color, it suggests we have a 3 green arrows technical setup right now. The 3 green arrows refers to 3 different technical indicators, including the 30-day moving average, the MACD, and the stochastics. So as an example, notice that today we actually received 3 green arrows on the S&P 500 and also on the NASDAQ composite. The reason that we were able to achieve that is because of the stochastics in both cases. Notice that last week we had a little bit of a drop in the stochastics. We then reversed that today with that all-time closing high price on the S&P 500. So we now completed the set of 3 green arrows in both the S&P 500 and the NASDAQ. And we use that for trend trading purposes. Trend trading, you want to kind of have the market in your favor in addition to having whatever stock it is that you're selecting. So, as an example, yesterday I taught my top-down trend trading class to our premium members here at Market Scholars, where we were looking not only to have a positive stock with higher highs and higher lows and bullish postures, but we also wanted them to belong to strong sectors, strong industries, strong markets. The more things that you can, align and the more boxes you can check, perhaps the more consistent your experience will be as a trend trader as well. So it is good to see us, kind of revert back to the 3 green arrow status on the S&P 500 and the NASDAQ. Note that we've continued to have the 3 green arrows here on the Russell 2000. So we'll have to keep our eye on that situation as we've had a little bit of a rollover here. But the Dow Jones does not have a 3 green arrows signal quite yet. And the reason for that particular one is the MACD. Notice that we did receive a phantom green arrow on the stochastics today, just like we did on the S&P 500 and the NASDAQ. But here we had an additional thing to worry about, which is the MACD continues to have a red arrow at this juncture. Now, if we do hit all-time highs on the Dow Jones here tomorrow or the next day or the day after that, of course, we do have the holiday coming up, but in the next couple of trading sessions is maybe a better way to phrase that, I would anticipate that we will get a set of 3 green arrows on the Dow Jones Industrial Average 2 to follow suit with what we've seen out of the S&P 500 and the NASDAQ. So, for all intents and purposes, we do have a reasonably strong market here right now. Let's take a look at our chart 4D now. This will be our longer term view. Each one of these charts is 3 years in length. Each one of the candles is a week in length. And one thing to report is we actually did get a crossover, or at least we're in the midst of a crossover here on the Russell 2000. So note, we do have bullish crossovers on the S&P 500, the Dow Jones, the NASDAQ composite. That's nothing new, right? We've been with that condition for several months at this point. All of them had a 10-period moving average, in this case a 10-week moving average in orange, rise above the 40-week moving average in blue. So example, that happened back in February for the NASDAQ and has continued to be the case ever since. But the Russell 2000 has been a different story. So let me right click, go to maximize sell on the Russell 2000 and show you what we've been dealing with here. It's been a little bit more chop and slop with the Russell 2000. We did have a bullish crossover, but even that, remember, was late. So a moment ago I mentioned the NASDAQ composite gave us our crossover in February. Notice that when we had a bullish crossover for the Russell 2000, that occurred in April. So it was already lagging those other indexes at that time. It did go up for a few weeks after that and then immediately reverted back lower. Notice that it took out that prior support level from a candlestick perspective there as well. And in doing so, you'll notice that that 10-week moving average came down and crossed again below that 40-week moving average, which is why we have that pink background color right there. So we've been kind of stuck in that death cross territory for the Russell 2000, whereas we have not been stuck in that with the other indices for the last month or so. Well, with the nice rally that we've had in June, we are now to the point where a potential bullish cross will happen again. Remember, that'll happen with any indicator. You have head fakes along the way. So perhaps this was just a little bit of the market trying to, capture a little bit of traction en route to a big move higher. Only the future will tell that story for us. But right now, what we do know is there's been enough of a bounce in the Russell 2000 while we've had that death cross where we now have a golden cross is what they refer to it when it crosses on the positive side there. So keep in mind that this is happening in real time. In other words, we're giving this presentation here on a Tuesday night. There are a couple of days left of trading this week. If we do have a really negative response, to the jobs number, for example, on Friday, and the market's crater to the downside, the Russell 2000 doesn't have to end the week with a positive cross or a golden cross there. So again, I do want to stress that we're early in the week right now, so it's not a guarantee that we're going to end this way. But as of this moment in time, we do have a golden cross that is starting to take shape here for this week's candle. So we'll keep our eye on that story, and when David gets back to you on Monday, because again, we're not going to have our Outlook video on Friday for the holiday, but David will be back with you on Monday, and we'll give you the assurance one way or another whether we ended up having a bullish crossover here on the Russell 2000 and see if it can catch up with some of its other indices that have already maintained that bullish crossover along the way. All right, moving right along now to our 12 grids. Chart 4E is going to pull up here for us. This is our intermarket analysis 12 grid. As a reminder, the background colors of these charts will turn either green or pink depending upon whether you have a bullish or a bearish posture using the market forecast intermediate term line. So again, it's just what I explained to you earlier. There are multiple ways to set your posture depending upon the time period that you're looking at for your particular trading style. But unless you hear David or I say otherwise, assume that when you hear us say posture from kind of a generic perspective, we're referring to the intermediate line on the market forecast indicator there. So as we pull this up, note that we do have a number of pink and green charts to deal with here. Be aware that interest rates have been kind of the talk of the town here in recent weeks and months. They continue to plunge lower and lower and lower. Yesterday was an interesting day where we did have a pop higher in interest rates, and we even saw pretty violent reaction. In fact, we talked about that in my top-down trend trading class yesterday because we do own a number of interest rate sensitive stocks in that particular portfolio. That's a supercharged 25 stock portfolio where we're trying to be in some of the hottest stocks in the market right now. And interestingly enough, some of the hottest stocks in the market right now have been some of the most boring stocks traditionally, like utilities and REITs. So yesterday, we took a little bit of a hit in that portfolio as interest rates actually went up for a rare time, and today we reverted right back into that same downtrend that we had. So today we actually saw a lot of those REITs and utilities bouncing right back higher after yesterday was ugly day. So note we are now at a fresh at least 3-month low. We're not at all-time lows, but at very close to all-time lows as well. But we're at a 1.97% reading on the 10-year U.S. Treasury. Quite remarkable there. Notice that the VIX was awfully beat up here today as well. It was down 8%. That was a bit surprising because I didn't get the sense that today's trading was a violent move to the upside. Oftentimes when you see a candle that looks like this on the VIX, it's associated with a really wild and big up day for the stock market. I didn't really get that impression. That's what we were dealing with in the stock market today. But it just is a fresh reminder that professional traders are not nervous right now. If they were, they'd be buying up a lot of protection in the options market, and that would be reflected there in the VIX. And we're just simply not seeing it. The VIX is trading below 13 right now. It's at 12.93. So, for those of you that are selling premium out there, hopefully you were selling premium back here when we had elevated levels of volatility, because right now you're just not getting as much juice when you're selling those options. Other things to be aware of on these charts, of course, the counter side of a falling interest rate environment is a rising bond price market. Notice that we do have TLT hitting a new closing 3-month high as of today. It closed at 133.26. So the U.S. government long bonds keep on performing. Hate to sound like a broken record because rarely do we talk about foreign bonds as often as we have in this video for the last several months. But I mean, look at this chart. This is BNDX here, the ETF that tracks foreign bonds. And that thing is just a rocket ship to the upside. You don't see that out of the bond market very often, but this is a very rare and unique time period that we're living through right now where bonds continue to work for the most part, including treasury bonds and foreign bonds. You'll also note that down below, gold has been in a nice upward trajectory as well. We were up over 1% in gold. Notice that gold is now over $1,400 an ounce. Note that we were quite a bit lower here just a couple of months ago. Gold is now up 10% in just 3 months worth of time. Also note that the REITs, as I mentioned earlier, had a nice snapback rally here today. So yesterday was a pretty ugly day for the REITs. You can see yesterday's candle right there. But notice today's candle. We closed at the high of the session for VNQ. It was up 1.74% here today. Remember, REITs are very interest rate sensitive. So when you see interest rates really fall dramatically like we saw today here with TNX, it's not a big surprise to see REITs positively benefit from that type of action right there. You will see that ag commodities slipped a little bit here today. That had been on a nice run here recently. But notice that today was an important candle because we closed below that rising 30-day moving average. Some folks might even look at that and say, isn't that looking a little bit like a head and shoulders pattern, which of course is a reversal pattern. And if that does play out, there could be further downside damage there for ag commodities. Crude oil has also struggled here in the last couple of days. Note the big down session there for the futures contract here just yesterday. US dollar was pretty quiet here today. It is considered to have a bullish posture right now from a market forecast intermediate term perspective. However, note that the price action finds itself just on the underside of a falling 30-day moving average, and therefore probably not the best setup on the planet for a bullish trade. It's probably better to wait and see on the US dollar right now to see if it's going to be able to handle slicing through that moving average. And if it does, can it hold it? Because we did slice through that moving average back here in June. It just wasn't able to hold it for more than a week, and it was dropping right back down and creating that lower high, lower low. So right now, we have to assume that that lower high and lower low holds on the US dollar. So we'll keep you posted if that does change at some point along the way. Let's take a look at our next chart setup now. This will be our chart 4F. This will be foreign stock markets. And same setup there as far as the background colors telling us whether we have a bullish or bearish posture using the market forecast intermediate line. Here you can see it's a little bit better story because we really have only one pink chart on the board. That's Mexico. Mexico was actually up just a hair today. It was up 0.07%, but you will note that it has not had the giddy up and go that the rest of the charts have here over the past week. We remain kind of stuck and just kind of riding this 30-day moving average lower for Mexico. Some of these other charts are starting to perk up a lot more nicely. you'll see our neighbor to the north rather than to the south, Canada, has actually had a fairly nice week here. We've had several up candles here, and we're very close to 3-month highs on Canada. Of course, we've been talking about Russia a lot lately. Russia has been a leadership country here from a stock market perspective over the last couple of months, and that remains the case. We've got a nice little bounce off of India, so that's good as well. India had a nice burst higher here back at the beginning of June, but kind of gave back a significant chunk of that. And it was anybody's guess whether it was going to give all of it back to where it was back here in May. So this is helpful to see India stabilize around its moving average itself, and now appears to be using that as a launch pad higher. So, keep India on your radar. This is EPI that we're looking at. If I were to right click on it, maximize that cell, note that we have a horizontal resistance area from right here, and right here. We've had a nice pullback, kind of reloading the chamber, so to speak. And if this thing does blast off to the upside, we could have a serious breakout from a horizontal perspective there on those 3 levels that I showed you a moment ago. So keep your eye on India going forward there as well. All right, let's now move on to our last 12 grid, which will be chart 4G. And this will be our U.S. sectors 12 grid. Now here you can see we only have one pink chart on the board, and that's down below here. This is the utilities sector. But before you get overly ambitious with a bearish thought process towards utilities, remind yourself that the interest rate environment continues to dwindle lower. At least that's what we've seen, and we haven't seen a break of that trend yet. With utilities being interest rate sensitive, remember, they generally do better when interest rates are falling, like we've seen here recently. And like the REITs, you had a bad day on utilities yesterday, followed by a very positive response today, where utilities closed nearly at their highs of the session, up 1.36% here. So yes, it's true, the background color is pink, and therefore the posture still is bearish according to the market forecast. But with your own 2 eyes, you can look at this chart and see that we've largely carved out a series of higher highs and higher lows for the most part. It might not be perfect, but nonetheless, that path of least resistance, at least according to the moving average itself, continues to be to the upside. So just be careful if you're looking at bearish trade setups there with the utilities. Real estate was enough of a punch higher there today, where we now have that bullish posture again on real estate, and the rest of the more cyclical areas of the market continue to have bullish behavior there as well. Some of the charts look a little bit better than others. For instance, energy, while it does have a bullish posture according to the market forecast, I don't know if I'd necessarily get overly excited about it right here. Now, obviously, there might be some value opportunities within the energy space, but as you look at this energy chart and compare it to nearly all the rest of the charts on the board, you can see it just hasn't had the same price momentum that a lot of those other sectors have had out there. Even materials, which a lot of times energy and materials are associated with one another. Notice that materials actually are up 4% over the last 3 months, whereas energy is down over 5% over that exact same time period. So anyway, energy remains in the house of pain. In fact, it would be a good time for me to kind of come on over to the internet for a brief moment and remind you that the sector selector generally gets published on Friday nights. And this upcoming week, because I'll be out of town, I'm going to do my best to get it done tomorrow night after I record the Market Outlook video. So as long as all the technology works properly, and my editing and uploading and rendering and all that stuff works okay, I'll plan to put a couple hours into producing the sector selector for those of you that enjoy having that on a weekly basis. But it will be as of Wednesday this week, as opposed to Friday on traditional non-holiday weeks. Well, as of last Friday's information, you can see we had a healthy shakeup in some of these various sectors that were out there. But of note, energy has not budged. Energy just remains in the house of pain, last place. And it's been last place for every single week for the last 3 months, with the exception of 3 months ago, it was second to last. So has really been the worst place to be from a price momentum perspective over the past year. There's been very few exceptions to that. I think, we took a trade on Kinder Morgan KMI in the Market Outlook video here once upon a time in the last few months, but that's been the rare exception. The vast majority of energy stocks have really struggled to keep up with the other sectors that are out there. But the other thing that I'll point out while we're looking at the sector selector here is the big shakeup in the interest rate sensitive areas as well. We did see real estate and utilities falling, and we did have more cyclical areas like industrials kind of surging a bit higher. So we want to keep our eye on that story as we move forward and see whether we're nearing the end of this big interest rate move or whether it's going to be the same old for the near-term future. Other things to be aware of while we're on the internet here is, remember, you can watch these Market Outlook videos on our website. In fact, there may be a change in the future that David's kind of sorting through as far as a kind of a strategy perspective and how we're going to be releasing these videos to you guys. So make sure you are signed up for a username on our website. Now, if you're already a premium member of Market Scholars, you don't need to sign up for another username. So I'm mostly speaking to those of you out there that are not premium members to Market Scholars already. So remember, you can sign up for a free user account on our website at marketscholars.com. Remember, you can just click on this little icon up here whenever you're looking at the Market Outlook video to do that. You should also be able to come up here to this blue bar at the exact top, and notice to the left of my cursor it says subscribe. So if you click on that, it'll also take you to the same place, and that would just kind of look something like this, where it's going to have you sign up for free for a free username right here. So anyway, make sure you're doing that, because there may be some changes in the future as to how you're going to receive this information. That's assuming you want to continue to receive the benefit of David and I's analysis going forward. Also, I appreciate those of you that clicked like last time that I did the video. 115 of you did that. Generally speaking, my bogey is 100, so I'm a happy camper with those of you that consistently do that day in and day out. That's your way to tell David and I that you appreciate the effort that goes into producing these videos every day, and all of the activity that is required after producing the video, as far as the rendering and sending out to the notifications and all of that. It does take over 2 hours to actually produce these videos every day. So anyway, if you want to say thank you to David and I, that's how you would do it. Just click like on Twitter, and that'll send the message to us that you want us to continue to do these videos going forward. We really appreciate that. Also, a quick reminder, I mentioned it already, but just to reiterate in case you weren't listening at that time, tomorrow's Strategy Lab class, for those of you that are premium members, has been moved up to 11 a.m. Eastern Time. That is a result of the fact that tomorrow the stock market closes early. So again, make sure you're adjusting your schedule accordingly. And then David is going to be out of town on the weekend for Independence Day, so he's not going to have any of his classes, but I'll be back in the saddle Monday for the top-down trend trading class at 11 a.m. Eastern Time as well. So make sure you enjoy your holidays safely if we don't see you between now and then. All right, let's go ahead and jump back on over to the Paper Money platform now and conduct our trade application example for the day. So for this, I wanted to come on over here to chart 4A. And I mentioned before how gold has really been breaking out here recently. We're over $1,400 an ounce on gold now, and it seems to be one of the more steady plays in the most recent, let's call it 5 to 6 weeks or so. In fact, it's not just gold itself. So remember, GLD is a way that you could trade just the precious metal itself. But you could also trade the gold mining companies. One way to do that would be through GDX as an example. That's your senior gold miners. You can see they were up nearly 4% here today, a nice healthy candle right there. And then also if you wanted to trade the junior gold miners or the smaller players, GDXJ for junior would be one way to handle that. And you can see that particular group was up over 5% today. Another nice snapback rally there after pulling back yesterday. So some resiliency there in some of those gold names. Now, of course, we've already traded some gold names in this particular account with the Market Outlook video. GFI comes to mind as one of those stocks that we already own. In fact, there's our stop loss way down below still. I think we placed that trade way back in January. So we've had that one on for quite some time. But I wanted to put on a different trade here tonight on Newmont. And Newmont is actually the only pure gold company in the S&P 500. It's based in Colorado. They recently merged with Gold Corp, so technically the new name is Newmont Gold Corp, but they did keep that old ticker symbol NEM. And you can see I've drawn up some annotations here on our chart, because one thing I recognize with Newmont, it was up today, but it was not up as much as some of those junior gold miners. Notice it was only up 1.4%, but then again, it didn't give back all that much yesterday. So remember when we were looking at GDXJ, notice that thing really fell out of bed yesterday. So it's a much more volatile experience there. Whereas with Newmont, you look at that chart, it fell yesterday, but it stayed within its recent sideways range. You can see I've drawn a sideways channel on the chart right here ever since having this gap up day basically on June 20th. We've been trading within this range right here. Note that the downside of that channel is at 37.21. The upside of that channel is at 38.74. Down here, we're at 37.21. It actually matched the exact low to the penny on those two candles right there. So we've really been in this sideways trading range for Newmont Mining. So I thought what we would do today is a swing trade on this one, where if we break out to the upside, now that's a big if, we don't know if it's going to happen or not, but if we do break out above the high of this candle back here, where we could play for a price target up here at this blue line. Now the way that I've calculated that is I've taken the distance between the low point of this channel that it finds itself in right now and the high point of the channel it finds itself in right now. In fact, if you hover your mouse over it, or if I do, you'll see right there it says height $1.53. That's what it's referencing, is that there's a $1.53 difference between this lower band of the channel and this upper band. And the theory of technical analysis is once you break out of that sideways channel, then a new range is established where there's going to be another $1.53 box between here and here to the upside. This would then become the new support. This would become the new resistance if this pattern would hold true. So I think what we'll do here tonight is we'll practice this idea of not buying it immediately first thing tomorrow, rather setting up a buy stop order. And if it does cross through 38.74, purchasing it only then, so it would require a further up move, but if it does, then we would automatically place a trade to purchase the stock with an upside price target up here at $40.28, which is $1.53 above this channel line right here. And then we would have a stop loss down below this channel that I mentioned before. So in other words, that would turn into a one-for-one reward risk scenario right there. So let's go ahead and place that trade. And for that, I'm going to go ahead and just right click on the chart. I'm going to go to create, actually it's buy custom with OCO bracket. So right click, buy custom with OCO bracket. That loads up our trade down below. Now obviously you're going to want a position size for whatever size portfolio you have. We'll just do a generic 100 shares by default here in this Paper Money educational platform here. But once this is loaded up, I'm going to click this little paperclip icon above those lines to kind of block all of those together. Off to the right hand side here where we see this green line up at the top, we can start adjusting this. And so where it says limit right there, we could do a stop instead. And what we're going to have to do is change that to a good till cancel order instead of day, because we don't know if that's going to get above our buy stop price tomorrow or on Friday or next week or what have you. So for that, we've got to click confirm and send. I'm sorry, not confirm, but good till cancel. Getting ahead of myself here. Good till cancel. So GTC is the acronym for that. And then you'll notice there's a second line that's now opened up down below here that is also colored in green. And for that, I'm going to type in there 38.75. Now what I'm doing is I'm putting it 1 cent above this prior high. So notice the high is 38.74. So I'm saying, okay, only buy this stock if it goes up and touches 38.75. In other words, it breaks through this prior resistance area. Now on the first pink line here, that would basically be a upside price target. So I would want to change that to $40.28. And that was the number that's represented by this blue line up here, which is $1.53 above the breakout zone. There again, I want to change that from a day to good till cancel. And then down below, where it talks about stop and then day over here, also change that to good till cancel. And then on the final line down below here, that's where you enter in where your stop price would be. And so for that, we would put that down at, let's call it $37.20. In other words, 1 cent less than the bottom part of this sideways channel that it finds itself in right now. So with that, let's go ahead and click confirm and send. Let's review this all together, and that looks fine. You can see it's going to be effectively a 1-for-1 risk to reward relationship, basically 153, 155, right there in that vicinity as far as upside potential versus downside risk that we would have in this trade. So let's go ahead and fire that off, and we'll see if we can get filled on that tomorrow. All right, thank you for joining me here tonight. Again, I'll be with you tomorrow since David will be out of town for the holidays, and then there will be no video on Friday this week since neither one of us will be in town and we won't have our recording equipment with us on the road. So it'll be an extended holiday for us here at Market Scholars, but we do hope that you have a great holiday. In the stock market, things seem to be going fine. Tomorrow's a shortened day, so expect low volume, probably low volatility as well, as a lot of traders are kind of unplugging from the market a little bit early before the holiday. But we'll review it once again tomorrow, and I'll look forward to that. So with that, have yourself a great rest of the night. Take care and best of success with your trades. Goodbye.